Welcome to today's Sunday weekly watch list. This week's Sunday weekly watch list. This week is going to be very important. I'm sure it has been a first trading week for not just myself, but for you guys as well. Um, it was a very difficult last week, but honest to God, I still managed to do really well just by getting around, day trading, taking advantage of the momentum of the downside, and now here we are trading at a very key level. And what we had liked to see was strength heading into Friday session. Now we did see strength, as we can see. We've talked about it in the mentorship classes. Anytime we see wicks, this is a sign of demand. This is a sign of buyers showing up, and we did get just that in the last 4 hours of Friday, basically of the trading week. On Friday, we had the first 4 hour where we tested the 560th support, and then we had a nice upside. But then even that sold off down to 568. However, that got dip bought and created another wick. So this is very bullish, seeing that, or this is, let's just say bullish, seeing that we are getting that reaction at support, just what we needed. Um, and the RSI is also looking good. So as we can see on the 4 hour time frame, bulls are stepping in. Now moving to the daily time frame, we can see that bulls are definitely stepping in above the usual volume. Um, and the reversal is definitely there, but there's still a lot of weakness, a lot of uncertainty around the sectors and in the overall market, which we will discuss shortly. But so far, what can we say about this chart if we take out all of the fear and panic? So if we take a look at the index, um, give me one moment here, team. Fear and greed, there we go. So if we take a look at the fear and greed, we're currently trading at extreme fear. This is when we're very bearish. Everyone's scared and nobody wants to buy the opportunity because everyone's cautious. So we can see that the reaction has been cautious for sure. We didn't get any bullish engulfing candles, but there was a reaction that bulls needed to place in order to set the ground for this week. So given that we are at the 200 SMA line, if we take out the fear factor and everything, and if I just go back to the historical charts, whenever we do retest the 200 SMA line, we usually get a rebound, regardless of how weak market conditions are. You can see we got one right there from 419 to 437. We got one when we lost the 20 EMA line here. We got somewhat of a rebound from 440 to 457, and we got it twice. So you can see, even if we were to, let's say, talk about the distribution process, we would still get somewhat of a reaction back up. So this is what we have not seen so far, and it's got everyone very scared. But I think heading into this week, with each hour that passes, there is a good potential that the momentum is going to shift back up to the hands of the bulls here. And the reason why I say that is because, like I said, the RSI is oversold. Um, we are trading at the 200 SMA line, and anytime we retest it, historically, we get a rebound, even if it's a fake rebound where we just, let's say, we fall and then we go back up. Even if it's just a fake rebound, we do get that rebound. So let me say another reason why I am expecting that counter trend rebound. SPY has gone from 613 all the way down to 568, super key support level there, as we can see. Now, without the tariffs, if the market had come down here somehow, without all of this fear, we would have bought the market very strongly, because that would have been a golden opportunity. But here we are now. Investors are very cautious, traders are very cautious, and it's a fair reaction given the tariff concerns. Now, let's say that the market will get a rebound here at this support level. And how does structure usually change? The way that structure usually changes is we go for a lower low, we get a move back up, it places a lower high, and then right at this lower high, once that lower high is confirmed, then we go for a new lower low, breaking that structure and breaking down to wherever that lower low is, and then that chain gets started for another lower lows and so forth. This is what will usually happen. Um, Now, where can we expect this sort of buying to come to an end, or where can we look out for that potential lower high structure that the market could possibly place here to signal that shift within the structure? So um, let's take a look at that. The reason why I have been looking at this 590 to 595 level is because that's the 20 EMA line. Whenever we basically have these swing highs and swing lows, um, regardless of the context of the market, whenever we get too overbought from the 20 EMA line, and this is why I love this particular indicator so much, this moving average, the 20 EMA. I use it as a momentum gouge uh, on the context of that given trend. So if we have, let's say, an expansion here, the market needs to do two things. It needs to digest. So the digestion is going to happen in two ways. Either we're going to consolidate like that, or we're going to create a higher low structure followed by a bullish reversal candle for another high, and then so forth. So if we draw these lines here, it always happens when we are extended from the 20 EMA line and then we contract towards the 20 EMA. We extend away, and then it doesn't always have to be a correction. Sometimes bulls can just build support, continue to show that there's lack of sellers, wait for the moving average line to catch up, and then expand again. This happens the same way in a downtrending market. First, we get that drop, and then we get a rebound back up, as we can see down here. We get a big sell off, and down here, probably many were bearish, thinking that we're going to just go lower and lower. But you can see we get a rebound to the 20 EMA, and once we show weakness there, this is where we expect another lower low to come, and then more lower lows to come after that. So let's say this is when we are breaking down, and you can see right here we go towards the 20 EMA retest. Once we see something like that, where we're clearly placing a bearish engulfing candle after what bulls have tried to counter with a candle like that, this is where we go bearish. Okay, so this is what I would like to illustrate here for our team today, in regards to where the market is. So what I would like to see is a rebound back up towards the supply zone, and this is where we expect smart money supply zone to basically head lower for a new lower low, breaking the 568 support towards new lows there. Now, how are we going to expect that? If they place, and this is what happens, okay, team, this is what happens. This is off of experience, and you can check it yourself. We study that in the mentorship. When we come inside of this supply zone, we place these reversal candles that can be identified to either signal a reversal, or this would be a continuation here, because well, it would be a reversal because it would signify a lower high followed by a lower low to come below the break of that support level. So if we go to the smaller time frames, we can see that is a supply zone. The reason why this is a supply zone is because that is where we saw major supply inside of that zone. And I'll show you here an example of a smart money zone. Give me one moment here, team, so that there we go. This is what a smart money backtest short signal strategy at the supply zone looks like. You got a drop, based drop, and then you come back up, you get that rebound back inside of that supply zone, and you place a reversal candle inside of that supply zone. That basically signals a downside to come. So this is why I am looking for the 590 to 595 level for that drop-based drop to happen. Why can it be a job-based rally? It could be, Muhammad. It really, it could be, but we won't find out until we get up here. So this is why I say, once we get inside of this zone, while many are going to be caught off guard thinking that the market is going to rebound here, we're going to look for those specific supply bars that signal a breakdown so that we can continue to short this. And I promise you, team, I assure you, the market always, always, always gives us that if we are patient enough to continue to observe until it does so. Now, do keep in mind, going into March 19th, which is not this week, but into the week after that, we have the FOMC rate decision where the Fed Reserve is going to decide whether they're going to leave rates the same, cut rates, or maybe even increase rates. We know that they're not going to increase rates. It's either leave rates the same or cut rates. So we can see this is 2025, and we have the FOMC meeting coming up on March 18th and 19th. It's a 2-day meeting, and on the 19th, they're going to decide on interest rates. Yeah, once that is released, we're going to see Powell come to the podium, talk about the Fed outlook, and answer journalists' questions, which usually does also affect the market. So yeah, this is the liquidity that can possibly come into the market, given we have those large events coming up, such as the CPI and the FOMC meeting. So we are at a level of support, and I think shorting here are going to get burned because it's just not a high probability level. Just like when we're in an uptrending market. Let me give you a perspective, okay, team? While many traders are very, very bullish here, I tell our team to just wait it out for this digestion to formulate. So every time we get far away, the market always psychologically tries to get me. It says, "Oh no, this time it's different. They're gonna get more. They're gonna go up higher and higher." It never happens, team. When we are too far away from the 20 EMA line, we contract back down to the 20 EMA, establish some sort of reversal, and then we rebound right back up. So the same thing happens every single time, whether it be in the form of a big correction or whether it be in the form of just going sideways until the 20 EMA catches up enough so that bulls can go ahead for another big bullish momentum run. And it's the same in the downside. So now that we are very oversold from the 20 EMA line, let's wait for it to catch up here. And now let's go into the stocks that I think are going to get a move from this. We'll take a look at QQQ as well, team. Here's QQQ really fast. Now, QQQ is the tech-dominated sector, and this is where we're currently sitting. We are inside of this bullish channel that has been in motion for the last 2 years. You can see we have rebounded here, here, and now here. So we have the right candle. It is a bullish hammer. We are definitely oversold. We did get volume above the average, above the 50-day average of the 40 million there. So the reversal is there. Now, do keep in mind, we did get a gap down over the weekend. It's at 491. We closed at 491.79 on Friday, and it's currently at 488.50. But I think by tomorrow morning, they're probably going to come back to 491 and continue from there. So I think this is a nice bullish reversal, and it could be the reversal candle that can trigger that corrective rally to come, that corrective not just a corrective rebound, basically a reactionary, a demand reaction right here that can see some upside. Now, once we see more upside and we come back up to the 511 area, this is where I will assess whether this is going to be a base drop zone. So whether this is going to create a bear flag where we further establish resistance right here at the top of that bear flag and then go down, or if this is going to establish as support and we actually rebound. But for now, all I care about is taking the market one step at a time, one day at a time, and using this opportunity here to get out of my long positions and pretty much assess and try and de-risk from this uncertain market until things start to look better. That's honestly what I would like to do with this potential rally that we will get. And most importantly, I would like to wait for that rebound so that I can buy puts much cheaper at the 20 EMA line, get the right bearish engulfing candle or a bearish shooting star, and then ride the move back down, trigger or expect support to be lost at 484 on this job-based job, and expect another job to come towards the 448 area, filling that gap on QQQ. This is very, very possible to fill the gap if we do lose that bullish channel, because this is going to get some major, major algo selling once we do lose this bullish channel. Keep in mind, team, this is on the daily time frame, and this is very reliable given that it's happening on the bigger time frame. Very, very, very critical week. So yeah, team, keep that in mind. Now let's talk about the sector rotations here. So far, any questions, team, before we go and talk about the sector rotations and the stocks that I think will get some rotation and some will get rotation outflows? Any questions so far, team? So to go back to Muhammad's question, why can it be a job-based rally? It very likely so can be, to be honest with you. But given the, you see, team, the way that you trade price action, you have to always keep in mind the context of like the given sentiment. So whatever the given sentiment is, you're going to add that to your price action analysis. This way, you can expect them to get rebounds, but you can say, you know what? When we get that rebound, I'm going to use that as either get better put positions to go with this trend, or expect this trend to establish some sort of strong demand, and then take advantage of. So um, yeah, understanding sentiment can be very, very powerful, and always keep in mind, take that into consideration, and knowing that everyone is fearful and there is ration behind the fear. um, I think we should try and pay attention to where the rejections can happen so that we can get those signals to trade with the downside market. Now, the reason why I say that is because we have already placed a lower low. You see, this was the structural change. Matter of fact, the reason why I'm turning bearish is because if we take a look at the bigger time frames here, we already fired the small double top that we had on the daily time frame, and then we fired the bigger double top that was on the weekly time frame, and that is just starting. So whenever you get three big supply candles, that creates an imbalance move. And what happens with this imbalance move is that you'll get some digestion, and that digestion will see overwhelming supply at the resistance of the zone there inside of that defined zone, and that will lead to another leg lower once there's overwhelming supply that is clearly dominating that zone there, and that leads to a job-based drop. So the reason why we are looking at bearish opportunities here is because looking at the bigger time frame here, it's very well aligning with where where things are going on an economic realm, if that makes sense. But yeah, this is what we're seeing so far, and it definitely could be like the previous times, but I think this time it's different. We are a lot more overbought. The market's been going up, and all the signals that are telling us is pointing to more downside. Now, I was already concerned about this, and seeing it come to reality over the last 2 weeks has really been eye-opening. And I think this is just the start of what's to come. Now, what we want to see heading into this upcoming week is overwhelming demand from the bulls to try and diffuse that. The only way they can diffuse this on QQQ is by breaking above 513 and really trying to get a massive demand candle on the weekly time frame above 528 level, 527 to 528. That's about the only way that I can see bulls really having a continuation from here and then getting a short squeeze from all of the traders that are getting trapped here. But the chances that this is going to lead to more downside is much more likely. That's how I personally see it. We are at a support level. You see, anytime we get to a level of support, we have seen strong demand. So heading into this upcoming week, if we fail to see that strong demand, I think that's going to lead to more downside. We should be prepared and expect more downside to come on this bullish channel loss. And anytime you see a bullish channel being lost, team, it's no different than seeing a zone that's taking place in a sideways zone. So it's no different from seeing a zone like that and then that zone getting a breakout. So just keep that in mind. If you see a bullish channel lost, you can see this is back in 2019 and 2020 and 2021. You can see once we lost that bullish channel, we went for a major correction to the 200 SMA line, and then we went all the way back up for another higher high. So if we do see something similar, we don't have to exactly go down to the 200 SMA line, but the first gap that I'm looking forward to getting filled is 448. And then we do have another gap down here. This gap was definitely filled. But yeah, there's honestly room all the way down to the 400s if this bullet channel is lost, just like we did around here. So as we can see, this bullet channel was lost and we created that downtrend there. There were rebounds within the downtrend, but you can see it maintained structure, lower high structures, which is just what we are expecting to see heading into this week. That just led to more and more downside for a large correction. We've already dropped more than 5%, and the market hasn't really gotten much of a reaction here. Very critical level for the bulls, but just keep in mind that our outlook is bearish. We expect the resistance levels at 510 on QQQ to hold strongly with bulls. Even if they break out, we expect it to be some sort of fake out where they will fall right back down. This is not the first time that we've seen something like that. We've seen it in the past, and what a coincidence that we are heading right into that sort of event with FOMC again. So you can see right here was somewhat of a fake out. So something like that could be possible. We'll see, team. We'll see. We'll see. We'll come back to this, but I do want to go ahead and cover the sector rotations here. Now let's cover XLK. XLK is also it's basically QQQ. XLK is one of the 11 sectors of the economy, one of the 11 sectors of the S&P 500. The stocks on this sector are Apple with 15% weight, Microsoft 13%, Nvidia 11%, AVGO 5%, CRM 3%. We got Cisco, Oracle, IBM, QCOM, all of those goodies, PLTR as well, AMD as well, MU, ADI, PanW, AMAT. So XLK here, XLK has already lost its bullish channel, and it's already trading below the 20 EMA line, below the 200 SMA line, meaning that it's entering a downtrending market, meaning a bear market on its price. And we have the right candle here. We have the right candle, and we did go below the 20 EMA line and created a trap last time. So it could be one of those scenarios where buyers show up here and take us all the way to 226. Now, this is where things will get interesting. Let's read this analysis here, team. XLK weekly and daily analysis. We'll take a look at both of them here. Critical level for the tech sector. Bulls must reclaim the bullish channel that we have here and sustain to resume this uptrend and continue to advance higher like they did last time. they must regain that bullish uptrend and really sustain it heading into the upcoming weeks here to continue and resume this channel on this bigger uptrend. Um, losing this channel confirms a trend shift with significant supply down to 192.30 as the next major support level. So coming down here, this bear flag here, what I mean is like, if we get a rebound back up to the 200 SMA line and the 20 EMA and we show clear weakness and we fail to break out higher and break that big supply zone, expect another supply candle to be printed with major downside to come in the form of this bear flag here towards 192. 192 is going to be the major support level where we expect the buyers to show up for the tech sector of the economy. So the bearish outlook is we got this job-based job formation, as we can see on the weekly chart as well. We got this job-based job formation, and this job-based drop here on the weekly chart can send us down to 192. So let's take a look at the weekly chart here. You can see the last time or the recent times that we reacted to the bullish channel, this is where it was formulated. This is where it was established. So this is when we started tracking it and extending it all the way up so that we can test all of the future tests. We can expect and assess all of the future tests for opportunities. You can see right here on the third one, or even on that one too, we got a rebound. On that one, we got a rebound. Right here, we got a rebound reaction. All of them demand reactions. Bullish engulfings, bullish marabuzos. But we can see this time, we're getting the three red soldiers, or or if you have a white and black chart, in the old school days they used to call it three black soldiers, which is basically three candles down that creates a bear flag and that send us down. So this is what we have so far, and this is a bear flag. So the reaction so far, we need to see that reaction. We're going to potentially see a counter move in the next 2 weeks, and we need to see overwhelming demand candles like this one right here, okay? And if we fail to see a candle like that at this bullish channel support, then this means this zone will be lost and we will head on that big correction. Now, I think this level is really going to hold because the government will likely panic and do something to try and stabilize the financial markets. And 192 could be major support for the XLK's technology sector. Daily chart key factors, 200 SMA line support currently acting as potentially temporary support here. So we can rebound here, but it could be temporary where this big supply zone could really overwhelm with another supply zone or with another bearish candle printing, telling us that bears are holding the line, sending us back down to the bear flag, and then dropping for another leg lower. Volume increasing on the red candles. Selling pressure remains very strong. RSI is at 37%, which means a small bounce here should be viewed as a short opportunity for us to go on that meltdown operation, given that we're below the 200 SMA line and the 30% RSI would lead to a meltdown opposed to a buy signal. All right. So the top holdings, like I said, Apple, Microsoft. Microsoft is really showing weakness, and sorry, it's one of the stocks that is showing strength, and it is one of the stocks that I expect to see a nice reversal on heading into this upcoming week. Apple also showing a lot of strength here. Really still holding above this breakout and could advance here if bulls do get any sort of momentum. But the key level that I would like to look out for is when they come up here. When they come up here, how are they going to react to this lower high structure? Are we going to see a lower high establishment with weakness, which will really confirm that breakdown? Or do we just break out from it and really show that bulls are coming in and really showing demand? We'll see, but I think we're going to reject. This is my thoughts here. So as the market rebounds, I am going to close out my Microsoft and more of the long positions that I'm in, and I'll try and take advantage of the market downside We'll take a look at Nvidia here as well. But yeah, team, let's take a look at the trading plan really fast. Bearish bias, unless XLK reclaims 230, we are not going to be bullish on this sector. We're going to use the opportunity only as a short-term bounce area. So watching for 215 to 218, but expecting a real rejection at 226, which is where I really would like to see it. Not at 215 to 218, but 226. So if I were trading the bullish side of the market, which is what I will be doing on Monday and Tuesday, I'm going to trade towards those levels, 215 to 218. But anything with momentum, I'm expecting 226, which is where the real rejection happening could be significant development to this continuing fear and a larger market downside. So large breakdown target is going to be, like I said, 192 demand zone, being a likely tested area in April and May if selling continues. Watch price action closely heading into this week. Um, if market sees any optimism with uncertainty going away on any comments from Trump, tech stocks could see a big rebound due to oversold levels. Um, like I said, these are the stocks in there, and let's just take a look at. So this is Microsoft. Microsoft is also looking good for a potential rebound here. Definitely has a lot of room inside of this bearish descending. Now let's take a look at Nvidia here. Nvidia has a bullish hammer reversal and could be a good bounce towards 120, 124, but I would be cautious around 124 area. Now, I would like to show you, let's see. I think Rainbond did share her analysis on. So this is Rainbond's analysis on Nvidia. Nvidia is setting up for a potential short-term bounce towards 126 zone this week, forming another lower high within its broader daily downtrend. So we can see that she's expecting another retest at the 120 area. Placing a lower high and then falling down towards the 100 level. So she is expecting a rebound towards 120, 125, 126, which is this big supply zone, followed by more downside to come after that. Potentially. All right. So we talked about XLK sector. Let's go to XLF. So team, the point that I would like to the point that I would like to share on the XLK sector is that we are at the we have sold off a lot. We're very oversold. We have a big drop, and now we need to create that zone here. First, starting with establishing the upper resistance line of the zone. So expect bulls to get a relief rally, and then identify the resistance level ahead, and assess the weakness there and wait for the right candles to formulate to see if that bearish lower high structure is going to be printed, which will signify that the trend is indeed changing. That's what I would like to show for XLK, which is the technology sector. As we can see on the weekly chart here, the rebounds here can just create a bear flag here, followed by more downside. Trust me, the market is going to print that bearish engulfing on the weekly time frame, and you're going to see, whoa, this is the candle that's going to take us down lower. Matter of fact, here's a good example. You see this one right here, team? You see we had three candles there, and then we got a bearish, we got a bullish counter trend move, bullish counter trend, and then that was followed by a big bearish supply bar. This is a 3-bar bear flag play that you can literally trade on that time frame. Now, remember, this is happening on the weekly time frame, but if you go to the hourly time frame, that probably took 2 to 5 days or 2 to 3 days to play out. Actually, no, it looks like it took 3 weeks to play out. So this is what I mean. It could be the same here. And it could see another drop lower the same way that we saw there towards that level of support. All right, so now let's move on to XLK. Okay, I see SR said, where do we see Microsoft rebound? Let's take a look at Microsoft really fast. Microsoft rebound. So Microsoft can rebound honestly all the way towards 417. Could rebound all the way towards 418 area. This is where I'm hoping we see a rebound towards. If not 418, I'd say maybe about like 413, 414. Once we get to that supply zone, this is where we will assess. This is where we will assess Microsoft and see if bulls are strong enough to pierce right through the supply zone, or if we are going to place another lower high structure there and see that smart money short opportunity to the downside. This should be red. All right, so that's Microsoft here. Now, let's go take a look at XLF, which is the financial sector. Now, here's the financial sector team. We are inside of this bullish channel here, and this is getting a Dragonfly Doji, which is a bullish reversal at this demand zone. So that is bullish at this bullish channel. That is bullish here. But if we take a look at the weekly time frame here, the bigger time frame, we are very, very overbought, and we placed a large bearish supply bar on the weekly time frame. The fact that we placed a large bearish supply bar is very, very concerning. Whenever we place that, you can see we placed a big bearish supply bar right here, and that marked a topping process. The rebounds there placed the gravestone doji reversals, the shooting star reversals, shooting stars, and it led to a major downside. So like I said, whenever we see a loss of a bullish channel, what happens is you can picture this the same way as that zone there. Once you get a breakout or a breakdown of that zone, it leads to more downside. And given that we have a big bearish supply bar, there's a high probability that this double top is going to fire down, and we will come down to this demand zone inside at 41.50. So let's take a look at the analysis here. XLF weekly chart analysis. This is the XLF weekly chart. We placed a large bearish supply bar, a large bearish engulfing bar on the weekly time frame, backed by strong volume. As we can see, volume is twice as much as the usual, and that is very concerning there. So we also, not only do we have a bearish supply bar, bearish engulfing, we also have a double top formation. We have a loss of bullish channel, which can further confirm this pattern. And our breakdown target is going to be around 40.61. Like I said, bank stocks at risk, expecting continued weakness in the following names: JPM, VMA, BAC, WFC, GS, PGR, SPGI, AXP, MS, BLK, C, and SCHW. Any rebounds are expected to be sold into, leading to lower prices to come. The trading plan is we have a bearish bias on XLF until it claims the bullish channel. Until it takes out the big supply at the 52 area. If they fail to take that out, we are going to expect more downside to come on XLF. So if we do get that rebound back up towards, let's say, 51 area on that 50% retracement of the big supply bar, we're going to anticipate more downside to come, with selling continuing down to this demand zone here. And this will reset the trend. Price will be very cheap. Market will have a shift from risk to reward perspectives. Mohammed, yes, sir. Around 124. I'll show you the analysis at the end of class, and I don't think Rainbond posted that. She posted in the private, in her note server where she leaves the notes. And yeah, this is the analysis here. Nvidia, she's expecting a rebound around like 124, 126, around where that big supply zone happened, placing a lower high structure at that trend line, and then sending it down to break support at 110. Followed by more downside to come. So she is expecting a rebound here. She's anticipating a potential short-term rebound towards that level, forming that lower high structure, and then more downside to come. Now, team, for the financials, as we can see here, these are the stocks within the holding. So we can start shorting Visa. We can start shorting Bank of America or WFC. All of these good stocks after some green sessions here, heading into this upcoming week. Now, this sentiment here on XLF, the financials, it is backed by uncertainty, by growing concerns that um, the tariffs can affect the financial, basically growth, and this is why financials are going down. So as we can see, we have a bearish engulfing backed by volume on the weekly time frame, could be signifying this double top structure to sell off down to 41.50. All right. Any questions on XLF so far, team? Shall we move on to XLY? So how do you take advantage of this analysis, team? Remember, heading into this upcoming week and into next week, when we see them rebounding back up, any sort of rebound, even towards 50, we're going to short the spikes. We're going to short the rallies on the banking stocks listed here to take advantage of this continuing momentum to the downside. Sorry, that's not it. That's XLY. This is financials. So JPMV, MA, BAC, WFC, GSPGR, and C, which is C is one of the good ones that I usually like to short, and so forth. All right, team. So now we go into XLY. So XLY, the consumer discretionaries, is placing a bullish reversal setup. Now, this retest at the 200 SMA line on XLY, which is consumer discretionaries, these are the stocks that has Amazon, Tesla, HD, McDonald's, Burger King's, Lowe's, TJ Maxx, Starbucks, Nike, O'Reilly, CMG, AutoZone, and so forth. So XLY here, this particular sector already had its big correction ahead of time. It's already dropped from 240 down to 200. So while some other sectors like the financials may pull back, this could see some rotation inflow to see a retest at this level of resistance inside of that supply zone and that prior resistance level before seeing more downside back down. So this is a demand zone, and bulls placed the right bullish hammer reversal there, which can see more rotation heading, more buyers creating a relief rally on XLY consumer discretionaries sector heading into this week and next week. So the daily time frame shows a strong hammer candle off of the 200 SMA support. Reversal signal suggests potential upside in the short term. This is a demand zone retest, which is a high probability trade setup. XLY appears to have corrected ahead of time, as we mentioned. Rotation could flow into this to get some buyers on these names: Amazon, Tesla, HD, McDonald's, Burger King's, Lowe's, and so forth. So if we take a look at, let's take a look at Amazon here. We can see Amazon's trading right at the 200 SMA line, very oversold. Could see a few green days of a rebound. Tesla also, which is another stock that's part of this sector, very, very oversold and definitely needs a rebound back up to even establish further structure up there. Take a look at HD. HD also oversold, needs to rebound towards 393, and then probably will be continued short opportunity there. Now there are stocks like yeah, that's about it. Mostly I'm looking at Amazon and HD. Amazon and Tesla. McDonald's should not be in here, by the way. McDonald's should be in XLI. I may have made a mistake there. McDonald's should be in the XL. Let's take a look. Give me one moment here, team. Oh, McDonald's is on here actually. Sorry, I was mistaken. McDonald's is on here. But yeah, McDonald's is showing major strength. Could be one of those stocks to trade. Just looks absolutely amazing. Could continue to see more upside, and could be a good one to trade on XLY rebound. With the 70% on our side leading to a melt up operation, sending the stock towards the 330s and 335s heading into this week. I would like to take a look at a few more stocks here because McDonald's got me interested. So, Burger King's, let's see, Burger King's. What else do we have? Lowe's, um, BK, BKNG. So BKNG is not looking the best. NKE definitely looks good. Looks like it has a digestion there. But I would honestly, yeah, it could honestly, no, it could be good for sure. It could see 81 heading into this week and maybe even, yeah, maybe even 82. DPZ, not looking the best on DPZ. Selling volume is increasing, and I think it could possibly see some downside here. Um, SR, can you go over Amazon? Okay, so this is Amazon again. It's oversold and it definitely needs to get a corrective wave back up towards 215 area. This is where I think Amazon is going to head towards in the upcoming weeks here. In the next heading into this week or next week, expect Amazon into FOMC to be trading around $215. Team, before we check these stocks, I would like to go over one more sector here and then we'll go ahead. So the XLY industrial sector, XLY on the weekly chart here has this bearish descending chart pattern despite bulls placing this bullish hammer looking reversal here. I don't think that's enough, and it's still placed a lower high structure, and I think heading into the next 2 weeks here, this stock is going to print or going to show more weakness to the downside inside of this bearish descending channel, breaking below 130 and heading towards the 119 area. Before you buy the stocks, before you go long on the XLI sector, expect another major leg down here towards 119.65. Now we will talk about the daily time frame and the weekly time frame, because on the daily time frame, XLI industrial sector has a potential. On the bigger time frame, it has this bearish descending triangle. Despite the recent week's recovery of more than 50%, we still close below the 20 EMA line after placing a new lower high structure. The bigger trend is turning bearish, while the smaller trend presents a potential rebound opportunity heading into this week. So looking at the smaller time frame for XLI, I am expecting a rebound to come on stocks like, for example, we take a look at Caterpillar, and there are more stocks in XLI industrial sector that can see more rebound, but please be careful because it could lead to more downside. Now this one right here, it could come up all the way. Caterpillar could come up all the way to 376, place a lower high, and then go for a much larger lower low towards 305 and even lower. So this is the 30% rebound from a downtrend, and placing a lower high structure could lead to major downside to come. So this is what we are seeing on XLI here. We are expecting a rebound, but this bearish descending channel could send it down to a major support level here, which will align with the overall market decline and really be a great opportunity, once in a decade opportunity, probably, for or let's just say in the next 5 years, for buyers there. All right, so potential descending triangle. We talked about the lower high. Price also rejected the 20 EMA line. Key levels to watch: 130 support is critical. A breakdown below could trigger more downside to come. Next major demand zone sits at 119, where a bottom formation is expected, where we want to go long on the stock. Implications for industrial stocks: if breakdown occurs, expect further downside in XLI components like Caterpillar, John Deere, Boeing, Honeywell, aerospace, UPS, UNP, RTX. Now, do keep in mind that this is actually one of the sectors where I could be wrong on it, because if you take a look at the volume team, we do have a really nice bullish. We have nice volume. So, what I will mostly be interested on this one is once we come up here. So you could even go ahead and trade the stocks within the industrials, expecting a little bit of a rebound in the upcoming sessions. And then expect more downside to come in the next 2 weeks here. So this is one of the stocks to observe and to really trade with the momentum of the downside. Once we come down to one, like even one, let's take a look at what that weekly wick was. Let's go back to the weekly here. That weekly wick was sitting at, even if we go down to, let's say, 133, uh, below 133.10, you could honestly start trading the momentum of XLI sector to the downside. I know it's trading there right now, but that doesn't count because I'm expecting them to get some sort of rebound and then show weakness after that. But yeah, this is where we can expect XLI to come down to 119, where the sector can bottom out. So the trading plan is, we expect short-term rebound on the daily time frame, but we do have a bearish bias on the bigger time frame until we really get above um, 137.50. Once we get above 137.50, we will have no more bearish bias on XLI, given that this will trigger the breakout from the downtrend. But so far, if it looks like a duck, it's a duck, and it's looking like a bearish descending. And team, the reason why I'm sharing that is because I swear to you, every single time I have overlooked these bearish descending triangles, I have been wowed bigger than the prior times, because my gosh, these bearish descending triangles are so cruel. And let me tell you the anatomy behind this particular chart pattern. You have a support level that gets one support, gets a big rebound. That kinetic support absorbs a lot of the buy orders. You get another rebound here that absorbs a lot of the buy orders. But what's happening in the front lines of the offensive? Well, you can see that bulls are not able to offense, basically go past that line there at that downtrending line. So the fact that we are seeing a lower high structure, which is a bearish structure only seen in a downtrending market, it's very concerning. Once we break below the support, oh my gosh, all hell breaks loose, and we get that big capitulation to the downside. It's a very infamous pattern, and I'll show you an illustration of now. I'm not saying this is going to play out on XLI, but we do have to keep in mind on the weekly time frame, taking it according to that bigger time frame. It could take weeks, months and months, but it could play out. Bearish descendings. I think bearish descendings may be a little bit up here. There we go, bearish descending. So this is what it looks like. We can see that we get a rebound, we reject, and then once we reject and we come back down and lose support, that's where we really start to sell off. Let's take a look at more examples here. Here's another example. We can see we do get that rebound, but right at that lower high structure, this is where we start to see these large bearish breakdown candles, which will really lead to that major sell-off. Main difference between a bearish descending and a bull flag. The main difference is that in a bull flag formation, Nate, we have equal highs. So if we take a look at a bull flag formation, in most cases we will see equal highs here. So this was somewhat of a bull flag, and we can see bulls really placed equal highs there. It really wasn't. It didn't look like a descending triangle, really. So just by the candles we will place there, I mean, honestly, this looks like it could be something that could play out. So heading into this week, if we do see something like that, Nate, where we print the same sort of candle like this, where we go down to 130 one more time and then come all the way back up, printing another bullish hammer the same size as that one, like we saw here, maybe a little bit bigger, showing that overwhelming demand, then we will 100% trade that breakout momentum as we can see there. But if we don't see that, it very likely will be a breakdown. But yeah, the difference between a bearish descending triangle and a bull flag is that bull flags usually happen during times when the stock is in their prime, and uh, there will be equal highs in most cases. Like we can see on this one, we got equal highs, and in those um, in a bull flag, what you'll see is like you'll see them clearly absorbing the supply. You'll see them absorbing the supply and basically overwhelming the supply every time. In a bearish descending triangle, you'll see them retesting the level and really seeing some very, very frustrating candles, frustrating reaction, especially if you're in the position. You'll be like, why is it reacting so weak? And before you know it, it's in a bearish descending triangle that's very infamous for these very large sell-offs. And yeah, team, that concludes my analysis for today. These are the stocks here that we will look into for these short opportunities. Take a look at Google here. Google has a nice bullish hammer reversal on the weekly time frame. It could also be a bullish harami. I'll bullish harami. Let's type that. So bullish harami reversal candle is something like that, where you got a big red candle followed by a bullish green candle there. Let's take a look at one with more detail here. This one right here, we can see if we take the wick out, it is basically a bullish harami reversal pattern, which can trigger a rebound back up. We'll see. We'll see how this one goes, but um, yeah, a lot of these tech stocks are sitting at these critical levels, and they're just a day or two from regaining their bullish channel. But the question is, are they going to be able to sustain it? That's all that really matters heading into the upcoming 2 weeks. We know they're going to get a rebound. We know that. The question is, are they going to be able to sustain? That's the question, okay, team? So when we come back up to the supply zone, let's say on Google, are they going to be able to sustain, or are they going to print these big bearish supply bars that clearly signifies these topping or that sort of overwhelming momentum on the market, signifying that bigger correction to come on a lot of these big tech stocks. So remember, this is not the first time the market has done something like that. We can see right here, we lost a bullish channel that also took about 2 years, and we really saw a nice correction. So it's something that we should be expecting. We'll talk more about this. Let's get that rebound first. We're going to assess the rebounds, but I will make sure that I get out of most of my positions. I de-risk so that I can take advantage of the great opportunities that can come from both sides, especially if we are patient for it. So if we do get any sort of rebound and that becomes a bear flag, oh my gosh, the opportunities could be amazing to the downside on tech stocks. Do you think XLV will get rotation if XLK is weak? TTM triggered, MACD cross, plenty of volume. I actually saw XLK, Charles, and I saw that I didn't really see a bearish or a bullish setup from it. Matter of fact, I think that if technology does come down, then XLV could advance higher. But looking at the weekly time frame, it looks like bulls are still advancing. It's a difficult level because it is that big supply zone. Um, but they are pushing the line day by day. So it is one of those sectors where I didn't know how to feel about it. It could do either or, and if anything, honestly, it looks like it's going to advance higher. But I didn't really want to get into any more long positions. I kind of want to just stay out and be on the sidelines and try and take advantage of the downside momentum. Maybe with like monthly expirations and even couple months out expirations, taking advantage of the gamma increase on the puts options. um I did have about a few stocks here actually. They're the stocks from last week as well. I'm expecting TSCO to get a nice rebound here heading into Monday. I'm expecting this stock to really get a massive move because it is backed by volume, and it's looking good for that expansion. So the levels we can look out for is 58 and even 59. Could be a good day trade or swing trade using August expiration. NEE, Nextra Energy. This is a stock that I shared a few weeks back, and it's looking very, very strong. Beautiful rebound off of the 20 EMA. Looks like we're going to get the expansion for that higher high structure to come around 75.80 heading into this upcoming week. So if you are in NEE, the contract that we shared um, um, 2 weeks ago, this is looking great and could see more upside. Um, AES, we are holding a January 2027 call on this one. We're holding an $11 call on this, and it's looking really good. It's bulls are still stepping in with overwhelming demand, and once they do break that structure above 11.98 on this higher low here, we could see the next higher high at 1259. Once they do regain 1259, that's a regain of the this bullish channel, this bullish support level, which can really trigger a nice upside given that they did a positive outlook ahead and they beat earnings. So um let's take a look at what else did we want to take a look at. Disney, I mean, I am seeing I'm seeing a lot of rotation flowing out of communication stocks like Meta and heading into streaming platforms like Paramount. So we can see Paramount, it looks like it's going to get another major green melt up candle heading into this week. This could go all the way up to 12.81 Paramount. There was another stock, VZ is another one, absolutely mind-boggling move. Looks to be melting up. Some of these, yeah, communications and streaming stocks are looking strong, but I'm just going to stay out of them for now. Walmart is showing a lot of weakness here. I did see it, but I would like to pay attention to a some sort of rebound back up towards 95 to 97 to create a bear flag to further establish there's bear flag, and then sell off all the way back down to $83 for Walmart. So pay attention to Walmart having a drop on this. We have lost that support, expected to create a bull flag here for more downside to come. It'll be a good one to short on the nice rebounds for Walmart. AVGO looks really, really good here. Very strong, backed by very strong volume. Matter of fact, team, AVGO is one of the reasons why I believe that tech is going to get a rotation this week. It's just it's had a very strong reaction right at this bullish rising support, and we got positive earnings. It's up 8%. It was up 8% on Friday and looking to get more downside heading into this upcoming week. So will be a good one to trade. BABA. Now, Baba, I'm looking at shorting this stock here. Okay, team. BABA. I'm really looking forward to shorting the stock here. For a nice pullback down to 128. We're very overbought, and I think we're going to consolidate, maybe even come down to like the 110 area, hold the 110, and then advance in the future for further upside to come on BABA. I'm long-term bullish on BABA, but short-term bearish, expecting a pullback down to 128. So far, I really don't like the way that Bitcoin looks. I mean, Bitcoin's down 5% as we can see here. And even if they do get that rebound, team, it could be a bear flag. We could get a rebound back up to 92,000 or even 88,000 and then just see more selling. Let's see. Just be careful, team. Be careful, okay? It is at a good level to buy the dip only for the short term. But I honestly would be careful on Bitcoin right now because investors are not happy with investors are not happy um, with the crypto reserve that Trump is doing. And the reason why, team, I'll explain to you why. Okay, they're not buying any cryptos. Okay, they're not buying any cryptos. All that they're saying is that any crypto that we have confiscated from what is that term? Did I say it right, team? Uh, from other, from criminals and so forth, is going to be put into that crypto reserve. So they're not going to be buying anything. They're just they're transferring those holdings that they have. What is that term, team? Am I really saying it right? Confiscated. This is what happens if you talk for like 2 hours, 1 hour. Um, oh, confiscating. Yes, sir. So that's what's happening. Okay, team. That's what's happening. So the government is withholding those cryptos from the criminals, and they're going to transfer it to that crypto reserve. So they're not going to be buying anything, and I think this is concerning investors. Now, don't get me wrong. I do think that a rebound can be possible here on crypto, but be careful, okay, team.